NVIDIA just reported Q1 earnings, and while the stock popped, the results were far from impressive. I've been posting NVIDIA analysis for the past few quarters, and what I see in this report might change your short and medium outlook on the stock. Looking at my estimates compared to the analyst consensus and the actuals, things look solid on the surface. However, this graph can be a bit misleading if large variances in estimates cancel out, and my accuracy is more a matter of luck than skill. This is a table showing a complete breakdown of NVIDIA's earnings and how they stacked up to consensus estimates. The top four green lines represent NVIDIA's revenue segments, and the only segment that outperformed expectations was gaming. Analysts and I both estimated around $2.8 billion in this segment, and the $3.8 billion reported was a 35% positive surprise. This graph shows NVIDIA's gaming segment revenue over recent history, along with the quarter-over-quarter growth rate. $2.8 billion would have been about a modest rebound after a disastrous Q4, while the record $3.8 billion reported shows quarter-over-quarter growth of over 50%. Coming back to the rest of the revenue segments, data center revenue missed slightly, even on the analyst consensus, and really disappointed based on my more bullish estimate. I did not expect such a massive slowdown in growth here, even with the disruption in the Chinese market. Quarter-over-quarter growth for data center revenue has dropped to single digits for the first time since its massive rally, and this graph shows that previous stabilization of growth in the low teens has now been broken. With access to China still in question, quarter-over-quarter growth could see a continued slowdown. Robotics and auto and professional visualization also fell short of analyst consensus, and in a seemingly hot period for the robotics industry, seeing no growth here is worrying. Taking the sum of this four total revenue segments, we get that $44.06 billion headline reported. This surpassed the analyst consensus of $43.2 billion, while falling slightly below my estimate of $44.3. Gaming was such a positive surprise that missing estimates on the other segments did not cause an overall revenue miss. EPS also beat expectations due to higher margins and lower expenses, which are illustrated in red in the table. The red section of the table is showing gross margin and the reported expenses. I broke my estimates into OPEX and non-OPEX, while there was no such breakdown for the analysts. Total expenses came in line with my expectations while surpassing the analyst consensus. NVIDIA did report strong gross margin when excluding the China-related charge. However, their non-GAAP gross margin fell to 61% when considering it. The company aggressively repurchased shares this quarter, and the shares outstanding fell to 24.62 billion, and that's right at my expectation. Guidance also fell short of analyst expectations at 45 billion, and the company noted an $8 billion reduction in guidance due to the disruption in China. It may seem like a positive sign that NVIDIA is guiding such a strong gross margin number. However, you might consider the fact that it could be an effort to offset the slowing revenue growth. The bottom image shows how the total revenue became the headline EPS and how it stacked up between me, analysts, and actuals. You can see how, on the surface, my estimates look fairly accurate. I came up only 1 cent short on EPS, and my total revenue was closer than the analysts predicted. In reality, I can see the cracks in both my estimates and this report. With Q1 earnings in the books and Q2 guidance set, I'm updating my price targets for both the short term and 1 year out. I still rate NVIDIA as a hold and maintain it as an equal weighting against the ETF QQQ. My current price target's $130 per share, aiming for about 40 times the trailing 12-month earnings. My current estimate for earnings over the next 4 quarters is going to be about $425 per share, and 40 times that would be about $170 per share. The 1-year earnings estimate reflects current expectations surrounding tariffs and international trade and could materially change over the year. Since the stock is currently trading above my short-term price target, I did trim my NVIDIA position and reallocated my portfolio slightly. I now hold 100 shares of NVIDIA at an average price of $111.5, and I'm still obligated to sell my shares at $200 in January of 2027. Overall, I still believe the company has a bright future. I also believe the stock is priced for perfection with a lot of headwinds coming. While I'm not adding on to my current position, I will continue to monitor to see how the company is navigating these challenges. Please do your own research and let me know what your price target is for NVIDIA in the comments. Please also consider subscribing to stay up to date on NVIDIA stock and the analysis. As always, this is for educational purposes only. Do not trade on this. This is not financial advice. Have a nice day.